how digital currencies could kill the dollar, and what that means for you. The US dollar has long been the cornerstone of global finance, underpinning international trade, investment, and reserve holdings. However, the rapid rise of digital currencies, both decentralized cryptocurrencies and centralized central bank digital currencies, CBDCs, poses unprecedented challenges to this dominance, potentially reshaping global economics in profound ways. Digital currencies are fundamentally altering the way we perceive and use money. Cryptocurrencies like Bitcoin, Ethereum, and stablecoins have gained significant traction, offering alternatives to traditional fiat currencies. Simultaneously, nations worldwide are actively developing CBDCs, government-issued digital currencies designed to modernize and streamline financial transactions. A primary factor challenging the dollar's dominance is the rapid adoption of digital currencies in international trade and finance. CBDCs, notably China's digital yuan, are explicitly designed to reduce reliance on the US dollar. China's aggressive push to implement the digital yuan in international trade, especially among trading partners involved in its Belt and Road Initiative, could substantially diminish the dollar's use, thereby weakening its global influence. Moreover, decentralized cryptocurrencies present a different, yet equally significant, challenge. Their decentralized nature means they operate independently of traditional banking systems and government controls. As more businesses and consumers adopt cryptocurrencies for transactions, investment, and as a store of value, reliance on traditional currencies like the dollar could decline significantly. Countries suffering from high inflation or unstable currencies increasingly see cryptocurrencies as viable alternatives, further eroding the dollar's global reach. Another critical area impacting the dollar is the growing interest in stablecoins, cryptocurrencies pegged to stable assets such as the US dollar. Stablecoins like Tether and USD Coin are becoming popular globally, particularly in emerging markets. They offer stability compared to volatile cryptocurrencies while maintaining many digital currency benefits, such as ease of cross-border transactions and reduced costs. However, their increasing use outside U.S. regulatory control poses risks, potentially undermining U.S. monetary policy and financial oversight. The U.S. dollar's dominance is also threatened by significant geopolitical shifts. De-dollarization efforts, driven by political tensions and sanctions regimes, encourage nations like Russia, China, and Iran to explore digital alternatives to circumvent dollar-based financial systems. These nations actively develop and promote alternative payment mechanisms, reducing their vulnerability to U.S. sanctions and financial control, thereby weakening the dollar's international clout. The implications for individuals if digital currencies diminish the dollar's role are profound. One major impact could be on purchasing power and savings. If the dollar loses dominance, it might depreciate significantly, leading to inflation and reduced purchasing power domestically. This depreciation would impact everyday consumers through increased costs of imports and international goods, significantly affecting household budgets and overall economic stability. Furthermore, financial privacy and individual freedoms could be impacted dramatically. While decentralized cryptocurrencies offer enhanced privacy and financial autonomy, CBDCs, by contrast, raise substantial concerns about government surveillance and control. Governments issuing CBDCs could potentially monitor individual transactions closely, raising fears about privacy violations and increased governmental overreach into personal financial decisions. However, the growth of digital currencies also presents significant opportunities. Increased efficiency, reduced transaction costs, and improved financial inclusion are key potential benefits. Digital currencies can offer unbanked populations unprecedented access to financial services, promoting economic empowerment and global financial inclusion. To address these developments proactively, policymakers in the US and globally are considering various measures. Regulatory frameworks to govern stablecoins and cryptocurrencies are actively under development to ensure financial stability and protect consumers. Additionally, the US Federal Reserve is exploring the possibility of a digital dollar, aiming to modernize US currency systems while preserving financial privacy and stability. Ultimately, the shift toward digital currencies represents both a threat and an opportunity for the dollar. While it challenges traditional financial dominance, it also provides pathways for innovation and modernization. Individuals must navigate this complex landscape with awareness and preparation, understanding both risks and potential benefits. In conclusion, digital currencies possess the potential to fundamentally disrupt and perhaps even displace the dollar's long-standing global dominance. While significant hurdles and challenges remain, particularly in regulation, adoption, and public trust, the trajectory toward digitalization in global finance is unmistakable. By proactively engaging with these changes through informed decision-making, effective regulation, and strategic adoption, individuals and governments alike can harness digital currencies' benefits while mitigating their risks, shaping a more inclusive, efficient, and innovative financial future.